What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market, because that is simply it's impossible to do. And hopefully you're not still straddling the fence and you are investing into appreciating assets and not things that are depreciating over time. So what happened in the news today? It doesn't look good, people. It says the Dow, S&P 500, Nasdaq sink as Wall Street eyes fallout from U.S. shutdown. So, is the market being punished because the government decided to open back up? I don't know. So it says here, a retreat in U.S. stocks picked up pace on Thursday as investors absorbed the end of the longest government shutdown in U.S. history, weighing its impact on the economy and the path of interest rates. The tech-heavy Nasdaq led losses with 2.5% slump. With a 2.5% slump, that's huge. While the S&P 500 sank 1.8%, that's huge. And the Dow dropped 1.7%, that's huge. To backtrack on its second record close in a row. So it says the Dow struggled amid a 4% drop for component NVIDIA as a rotation out of techs to less highly valued sectors resumed. So people seem to be pulling out of tech. They're losing faith in it. Disney's 8% fall after disappointing earnings also weighed on the blue chip benchmark. Tesla's shares lost 7%. In Washington, President Trump signed a bill ending the record-setting 43-day U.S. federal shutdown, into law after the House passed the measure in a 222 to 209 vote on Wednesday evening. The stoppage is likely to have long-reaching effects, and an analyst from the Congressional Budget Office found that the U.S. GDP could be roughly $11 billion lower by the end of 2026 than previously expected. But Wall Street questions about the economy are set to persist after the White House said reports delayed by the closure will be permanently impaired and will likely never be released. That on purpose? I don't know. Data on inflation and job markets in October are in the air, even though there's reports out there that are saying there were 153,000 people laid off last month. Though a top Trump advisor said Thursday that the jobs data may be released, but without a read on that month's unemployment rate. Okay. So that uncertainty about the economic outlook is complicating bets on interest rate cuts in December and next year, as it could impact the Federal Reserve's thinking. Markets are pricing in a roughly 50-50 chance of a reduction at policy makers meeting next month after a wave of hawkish commentary from officials on Wednesday, compared with around 95% odds a month ago. Whew. Also, it says Bitcoin fell below 99,000. I don't know. A lot is happening, people. A lot is happening. Yeah. So the market is still open. Palantir is currently down $12. Tesla is down $27. Meta is down $1.50. SPYM, the S&P 500 ETF, is down $1.31. FTEC, Information Technology ETF, is down $6. Broadcom is down over $16. NVIDIA is down over $7. Damn. Stocks are taking a hit. They're taking a hit. But I will say right now is about the time to buy. When they're going down, it's time to buy. When I get paid, when the federal government pays me my full paycheck, I'm going to invest money. You buy the dip. Right now, these stocks are pretty much going on sale. The likelihood for them to get back to the levels that they're falling from are good, in my opinion. So we'll see what happens. Also, we're going to pay attention to Michael Burry's or Blurry's, whatever his name is, his $1 billion bet against AI. We got to pay attention to that as well. Is there an AI bubble? I don't know. But I'm going to continue to invest. I'm going to continue to dollar cost average into the stock market, invest what I can afford to invest, and also afford to lose if there is a loss like today, and continue to do what I do and do it without fear, right? I'm very optimistic. So hopefully you guys are investing, and in order for you to invest, you need to get out of debt, because majority of Americans are in debt. They're in over $18 trillion worth of debt. You know, credit card debt, student loan debt, personal loan debt, car loan debt. They're in debt. You're in debt. So you need to get out of debt so you can invest into yourself, invest into real estate, invest into the stock market, invest into a business, invest into things that are appreciating. Hopefully it's a good business over time and not depreciating. Like cars, clothes. Hell, that's it. I was about to say trips, but yeah. If you're not paying cash for that trip and you put it on your credit card, that's still an L, in my opinion. Anyway, yeah, get out of debt, people. Create a plan. You know, like I said, I changed my benchmark from 3 to 6 months of living expenses for an emergency fund to 6 months to 1 year, because things are speeding up, people. The market is speeding up. More money is being thrown in and out of the market than ever before, right? Technology is speeding things up. So you need to become a part of that movement. If not, you're going to be left behind. And hopefully you are investing into good growth stocks. You're doing your research, or you're having some professional do it on your behalf, or you're going to miss out on the gravy train. So yeah, so I'm going to end this video. That was pretty quick. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. And yeah, oh, disclaimer, I'm not a financial advisor, nor am I pretending to be one. So any and all information on my channel is for entertainment purposes only, and it reflects my opinion. So please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Have a blessed day. It's Friday here. Have a good weekend. Peace.